If it's going to happen, it's going to happen now. So we're going to explode in Q2 above all-time highs.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is Patrick Karim from badcharts.com. Patrick, thank you so much for joining us today.
Hi, Elijah. Thanks for having me again. I appreciate your time.
Definitely. And we appreciate you coming on and sharing your insights with us. Now, you're an expert, on technical analysis, and you've done a lot on the gold and silver markets. What I really wanted to discuss today is really just for you to give us an update on where silver is right now. You said last time that, silver needs to break above, the $28, $29 level for it to really take off. After that, we've seen a pullback since we've last spoken. So in your mind, does this pullback change anything? Is silver still looking strong?
I think it's even looking more strong than the last time we talked, because gold has pulled back even more, I believe, since the last time we talked. But silver has still stayed like a few bucks away from that 28, 29 level from the 28. I think now today it's 26.50 or 26.25. So its relative strength is just showing you, just waiting, because all the other times that let's say 2012 or 13 top, when we entered the bear market, or even before the 2008 crash, when gold was correcting severely, silver was doing the same type of candles. So if you would overlay those two charts, gold, as much as it's corrected, it would have, if to be really some signals that silver would be in big trouble, it would have been already started correcting as much as gold, and it just didn't. And that divergence is I think a key that we have to keep in the basket of evidence on the bullish case that. Silver sniffing out something that whatever's happening to gold, as soon as gold starts turning back upwards, silver will be ready to continue and close the quarter or the month above 28, 29, and really start that next leg up. Because I remember I have silver, I'm really expecting it to explode in Q2 of this year, then rest Q3, and then Q4 explode again. But a Q2 is starting in April, so the price action right now is really setting up there for an explosive Q2 for silver.
So that's still your view that in pretty much 3.5 months, we could see new highs for silver?
Yeah, definitely. If it's going to happen, it's going to happen now. So we're going to explode in Q2 above all-time highs on a smaller time frame. So whatever it is, 45, 50. And then Q3 consolidates severely, like silver has always done. So all those fear of missing out traders, all the ones that didn't get in below 20, 28 at these levels, a lot are going to be buying at 45. They'll get trapped. And after that, if the price stalls, then as the price action goes down, they're going to sell. So it's going to consolidate all the way back to 28, 29. So in technical analysis, whatever's a previous resistance, as soon as you break out above, that becomes what I call a wall. So that'll be support. So wherever high we go, we're going to probably come and retest in Q3. We're going to go and retest that 30 level. And then after that, once that consolidates right above 30, and if it holds, then we'll be ready to do another leg up even higher above the whatever highs we did back in the Q2. We're going to probably do above that in the Q4.
Last time we had you on, you said there was a possibility of kind of just further hibernation, just consolidation in silver and it not breaking out. You're thinking that that's probably less likely now since we've seen relative strength in the silver market recently.
For silver, it's I believe right now, yeah. So as the price action, it didn't go back down to 21, then go back down to 20, it didn't go back down to 24. So those probabilities have diminished. And especially what's gold showing now, because gold was really the ringleader. And if gold was to have dropped even more, it's like I have lines in the sand for gold. It's a monthly close, super important, but it's even more, it's a quarterly close. And gold, I have a fine-tuned 15-month moving average. And every time in all of its bull markets, it's always managed to close above that 15-month moving average on a quarterly basis. And that, I think right now, that 15-month moving average is at a 1770 something, about those numbers. And gold was far away from that, was like a high 1690s, maybe a week back. And it's slowly climbing above, so close to that level. So if it could close the quarter above 1770 or 1775, it's for me, it's game on, it's back. So now all the price action we've had, all the bearishness will just end up like being a wick on the quarterly chart. So that's why you always got to take a step out, like day traders or swing traders, you got to be careful, because if you're on the smaller time frames, as soon as the brakes are hit, you're going to hit your head on the steering wheel. So you always look back, and the March close is really, really going to be key. And if gold closes above that 1770 level, wow, there's going to be fireworks, I believe, there in Q2 for gold. Is going to probably maintain and climb, but silver is really going to explode in Q2.
Now, what price target are you looking for the quarterly close on silver?
Well, for silver, since it's quarterly close, I think, or it's a fine-tuned 15-month moving average, I think it's at 21. So that moving average, I'm only looking at it for the bear case, but silver's so much above it's a 15-month. It's not that extended from its 15-month moving average, but it's not anywhere close to we got to be careful that if it closes below, silver's going to hibernate, or there's something macro we missed. And so right now, silver, it's above its $21 closing point. I'm only looking upwards. The silver, what's going to happen now, I'm going to look eventually how far it gets away from its 15-month moving average. And when it gets too stretched away, then we could say, okay, we might be running out of steam. But right now it's pretty close to it, and it's just really coiled, really ready to spring upwards. It's the perfect low risk, high reward situation you could have right now there, since the last time it exploded above $19 in 2020 in July, I think. We're back at this stage almost 1 year later.
So it sounds like this quarterly close is pretty important. If we do see, for example, gold not move above that 1770-ish level, where does that place gold at the end of March?
We're going to have to take a step back, because that's one of the last lines in the sand, because you could always move like the technicals whenever they break down on the smart time frames. You take a step back. People, they say they call that moving the goalposts, but those goalposts, they're always there. Just where the goalpost on a daily chart is on the same as on a weekly chart. But eventually, you want it really to close above that level. If it doesn't close above, or it's just like borderline, you could make a case, okay, we could maybe postpone it another quarter and see if it really closes convincingly below that level, because it's not like a perfect, it's not 0 and 1s, right? But you want to be close to it. But if it really closes below, let's say it crumbles right now, the price action, and goes back down in the high 1600s, we could expect as gold sniffing out something that we should be wary of, especially if that's combined with silver not able to put in a new break above that 28, 29 level. Those could be some headwinds there that we should really consider. But until then, I think March is going to be very interesting there to see how it plays out in the next couple of weeks.
Definitely. And you've also been reporting on the miners and the Philly index, right, where it takes kind of all the gold and silver miners together. And you're saying that that's looking very bullish right now.
If you're zoomed in, it's hard to see, but as soon as you go on the quarterly chart, it's been forming a perfect, like an arc base. So it had off the 2011-13, it went down, consolidated for many years, and exploded all the way up. And now it's been correcting severely, but on the quarterly chart, it doesn't look that bad. It's still carving in higher lows on the quarterly chart, and it's starting to define the right hemisphere of the arc. So as soon as you have two touches on the right hemisphere of an arc, you're really confirming that angle of ascent, and all those bullish targets that you're supposed to reach the top of the arc, all that's confirmed. So they're high probability events. And right now, the quarterly close, if it could close just where it is now, is going to be perfectly situated to say, okay, the bottom's in, and we're ready to continue our ascent to the top of the arc. Once you get to the top of the arc, then we'll have to re-see how the chart looks like. Are we going to build a handle on the side? Or are we going to just power on through? But right now, when everybody, like all the trolls are out, and like even I've noticed in my Twitter follower account, rock bottom, my tweets, rock bottom. So those are a lot of like contrarian indication there you could pile on that the bottom's very close to being in there or if it's already in there for the whole precious metals sector.
Are you more bullish on the miners or the actual metal, gold and silver?
As soon as gold broke out and led the way back in 2019, and silver did the same thing 1 year later out of its base, you have to look at the miners. The miners ultra volatile, especially let's say SILJ or any of those components. In the correction, if you look at them, you're gonna be heartbroken. It'll be going down 10% every day forever. But after that, in one day, 40%. The next day, up another 40% because they're small caps. It's super, super, super volatile. But if you want leverage and you don't want to go in options, or time decay, the miners is the place to be there. Once the metals have opened the gateways, because the metals are also like money, right? Gold, you can't expect gold to do 300-400% in a year. That's not the way it trades. It trades slowly as money is being debased. Silver has the industrial component, and at the end of its run, it's going to go parabolic and you get a lot of gains. But in the meantime, miners is the place to be there.
Now, when analyzing the gold and silver markets, do you also look at some of the fundamentals? For example, recently, one of the things that people are saying is driving down the price of gold and silver are interest rates, right? We're seeing interest rates rise. So how do some of the fundamentals like that impact your analysis of the gold and silver markets?
I don't look at fundamentals, but if there's chartable, so if I get macro charts, which I could do correlations and see how the price of the metals reacted, then I incorporate them. And it's curious because for the rates, it's we've always seen gold go up with the real rates. So those nominal rates, they could be going up, but if inflation expectations are higher, then actually it's you subtract the nominal rates minus inflation, and then you get a negative real rates, and gold thrives in that. But something curious happened Friday, that even the real rates, they went very high, rates went up high Friday, gold did not crumble. There's this type of divergence that happened, and I've noticed this even in 2004, where gold actually went up and silver actually went up with the real rates going up, and the correlation is not one-to-one, so you got to be really careful. So you have to, at the end of the day, you have to look at just the price action of the metals or whatever you're trading, because the market sometimes it discounts what's happening in future. So when you see divergence, then you say, oh, okay, gold is not believing that the real rates will keep going up, or they're believing that inflation rates that data is going to come in soon, and sniffing out that the next CPI results are going to be through the roof, and it's already starting to price in. It's like that sell the news, buy the rumor, sell the news type of event. So we could be at a turning point where gold is not believing that the real rates will drop, and so even if we're seeing those nominal rates go up and the real rates aren't really reflecting that the high inflation that's going to be incoming, gold refusing to go down and actually going up, and silver staying up, and copper going through the roof, and oil going through the roof, they're really starting to discount the probabilities of surprising inflation numbers right around the corner, around the next release.
That's really interesting. You're saying we're kind of seeing a disconnect between the rates and gold. The negative correlation we've seen for so long is kind of disconnecting. You also mentioned at the beginning regarding gold and silver, how silver has really held up well in the last month or so as gold has gone down significantly. So why do you think we're seeing these kinds of disconnects more recently?
You see them at turning points. So reconnect. So I think at big turning points where everybody gets confused, and even myself, like on the correlations I used to look at, how come they're not working anymore? Why is gold going down or up while the rates are going down? Well, it's hard because it's the future. Nobody knows it. So all those the market discounting stuff that we can't even imagine, right? It's like everybody who has a theory, everybody has a research firm who has billions of dollars, that all that aggregated the information put together make the actual price action. And when you start seeing those disconnect, it's like I call them paradigm shifts. Something's happening, and if they keep happening, eventually you get a new correlation, and then you could ride that trend. That correlation stays fixed for a certain amount of time. Something's happening right now. Maybe gold's going to start rising into an inflation, or detecting a sustained inflation for a long time. Because right now, since 2000 to 2011, gold has been going up on increasing, let's say, inflation expectations, but we're still in a disinflation cycle for the rates. So the rates have peaked in 82 when they went down and up, but always lower highs. But gold has still managed to go up since 2000, hitting rock bottom, to go up even in that downward cycle. So one of my theories is, if ever maybe gold sniffing out that we're at the end of that disinflation cycle for rates, and we're back in the 60s where it's starting to sniff out, hey, this is rock bottom, and rates are going to go up from now on, and like through the 60s, 70s, 80s until we hit another peak. But we can't see it now. Like, we need more data. We need to wait for the charts like to morph, over months and months and months. But definitely good to keep an eye on those small details, but you can't drown in them. My best advice is, at the end of the day, just look at the price of the gold chart. Is it above its 15-month moving average? Look at silver. Is it about to close above 28, 29? Those are the two main technical thresholds people should be looking at right now there.
You talk about this paradigm shift. So kind of the markets, it seems like, because we're seeing these disconnects happening, you're saying the markets are kind of pricing in that the financial system is about to change, or something about the financial system is about to change significantly.
Yeah. So the symptoms, is it like the egg or the chicken? Like there is something that, and often it's the unexpected. So I'm not old enough, or the stuff that I remember, sometimes I forget. And everybody says, oh, the rates can't go up. It's going to break down the whole system. Well, what do we know? Maybe the rates will manage to find a way to go up, and there's going to be an insane solution that nobody thought about. And usually it's kind of like a reality. It's like kind of a halfway in between those extremes, right? People say rates can never go up, and people say rates have to go up. It's just going to be curious to see there how we go forward. Are we going to have like another Bretton Woods type of event, and all these theories, everybody's throwing them out? My gut feeling's telling me it's going to be nothing that anybody expects. Nobody's going to know exactly what it's going to be. A hybrid solution of something, but definitely the charts are showing to expect the unexpected right now going forward there. That's definitely something that's in the cards there. Something's going to happen. What? And my guess is as good as yours, Elijah, for sure.
All right. Well, Patrick, Karim, thank you so much for your time today. Before we let you go, if people would like to subscribe for more of these interviews, they can hit the subscribe button here on YouTube and the bell icon. And also, they can find you at badcharts.com. And where else can people find you? And any last thoughts you'd like to
add? Twitter, badcharts1 on Twitter. Recently, I posted an article on Wall Street Silver, just to put some technical analysis out there, and it got like over like 40,000 followers and growing. So I was really impressed with what's happening on Reddit at the Wall Street Silver. Of course, I'm contributing to Steve Penny's Silver Chartist report there, free newsletter. You could every Sunday he releases. I put some exclusive charts there, and that's about it, guys. It's going to be a pretty fun summer for precious metals. We're in a bull market, and if people take a step back, you'll see we have many years of gold and silver appreciating, hard assets going up. So forget that noise, 20-30% drawdown, unless you're a day trader. For me, that's all noise for now. And always take a step back there, and you'll see there that we should be doing great there until the end of the decade.
Fantastic. Patrick, once again, thank you so much for your time, and God bless.
Thank you, sir.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.